Hello, it's Louise here with Finance Illustrated, and in this video we're going to talk to you about where you should invest in 2019. So back in 2013, you could have picked any random stock because all stocks went up. In 2017, the task was to pick the stock that was going to fall the least. And this year, it's going to be very interesting because there will be plenty of volatility in the market. So assuming you've done your research, you need to take a look at your current risk. If you're heavily invested in tech stocks and little invested in other asset classes, it might be time to divide your portfolio a little bit better. In saying that, based on your research, you might be super confident with your choice and want to invest a large chunk of money to that asset, and that's okay. Nevertheless, if you're just starting out in the investment world, you might want to diversify your portfolio. For example, the price of gold has gained more than 8% in the last 2 months of 2018. The S&P 500 plunged 14% during the same time. So, if you were heavily invested in US equities and nothing else, you would have made serious losses. Stocks overall have been doing poorly over the last couple of months due to weak company earnings, China's slowdown, rising interest rates, and the fear of a global slowdown. However, the US economy is still expected to grow at a slow pace, and company earnings this year will be stronger than last. So don't throw all your stocks out of the basket just yet. Walt Disney is expected to be a good investment going forward in 2019 as the company continues to add and retain subscribers in all of its services. The acquisition with Fox adds to the strength of the company, and the theme parks continue to be major money makers. Oh, and here's a little tip. Keep some of your spare cash aside for bargain stocks. With the way the stock market is performing at the moment, no doubt there will be cheap stocks with a lot of potential. Okay, so apart from having stocks in your portfolio, gold should be in there. When there's volatility and uncertainty in the market, gold is considered a safe haven. The threat of the US-China trade war still remains, Brexit is still unresolved, slowing growth in major economies is expected this year, and there is the possibility of political changes in emerging markets. So, in these uncertain times, gold will perform well. It's estimated that gold will reach $1,450 an ounce this year, and that you should allocate up to 10% of your portfolio to this asset. Next, oil has been on a rocky road during 2018. It was up to a 4-year high in October and dropped a massive $30 in the following months. The oil market in 2019 is going to face plenty of more challenges relating to supply and demand. OPEC announced production cuts in December, but this failed to produce any price increase, and so OPEC might have to add more cuts if nothing positive materializes soon. Now, there is a long list of uncertainties for oil, and even the best plans can be uprooted on the back of geopolitical and economic news. So take care when investing in oil. Moving over to currencies, the US dollar was the second strongest currency after the Japanese yen. It rose more than 4% against other major currencies in 2018 and appreciated significantly against commodity and emerging market currencies. And that was due to strong economic data, fiscal stimulus, and a hawkish Federal Reserve. But this is likely to reverse in 2019 as we see the US fiscal and current account deficits possibly widening. Now, 2 US interest rate increases are still on the cards for 2019, but traders are getting increasingly skeptical of that happening, and some predict that the Fed will actually cut rates, which will in turn send the US dollar lower. The first quarter of 2019 will be tricky for the sterling unless the UK can smoothly exit the EU. If this happens, then the pound will get a boost, but if there is no deal, an extension to the deadline, or even a general election, expect to see large swings in the sterling, at least until the Brexit clouds clear. Now, cryptocurrencies. It is no surprise to anyone that 2018 was a dire year for Bitcoin. It dived from the high of $20,000 to under $4,000 and has been pretty volatile since, jumping a couple of $100 some weeks. The main reason cryptocurrencies are not accelerating is because investors are waiting. They're waiting to see if exchanges can get the green light from the Securities and Exchange Commission regarding the Bitcoin ETF. The Nasdaq is ready to launch Bitcoin futures in the first half of 2019, but needs to get the official go-ahead first. Economists are bullish on Bitcoin, and some believe that it will reach its previous of $20,000 by mid-2019. The more acceptance by both the public and large financial institutions will see the price of Bitcoin going higher and higher. Now, it could be worth allocating a small portion of your portfolio to Bitcoin should the price rise as analysts predict. So, to sum up then, investors will have to keep a close eye on macroeconomic data, US politics, US trade with China, and Brexit negotiations. These factors will help determine the best trading strategy in the first quarter of 2019. Now, in terms of how much to put where, it's advisable to have a few different eggs in your basket. Stay away from investing all of your money in tech stocks, for example, that may all go down together unless you are 99.9% sure that you know what you're doing. Take a look at your current risk. Do you have 70% of your investments tied up in equities and 30% in commodities, cryptos, and others? Well, spread it out so if you lose in one instrument, that the others will cushion the losses. So now you know what to do. Test the waters. Successful traders never put off until tomorrow something that they can do today. You have to seize every opportunity to achieve your trading goals. If you've enjoyed this video, like and subscribe for more. All the best in 2019, and we wish you plenty of profits.